Hi, we're Group 10. Our topic is mutual funds, and we are going to discuss Fidelity investments. My name is Anna Steele, and I will give you a brief company overview. Fidelity is an American company that is headquartered in Massachusetts. By the mid-1940s, shortly after its inception, Fidelity had 13 million in managed assets. By the end of 2008, this figure had increased to an impressive 1,247 billion in managed assets. In February 2009, the figure had decreased again to 1,184 billion managed assets, which means it's a decrease of 5%. Of all Fidelity's managed assets, 88% comes from around 63.4 million mutual fund accounts. The rest comes from Fidelity's other ventures. In addition to having over 460 mutual funds, Fidelity's other financial activities include discount brokerage services, wealth management, securities execution and clearance, life insurance, college saving plans, estate planning services, and advice on charitable giving and new business ventures, among others. Retirement services have become a key component of Fidelity's financial services. The firm offers plan administration services to small and large companies that include record keeping, investment choices in both Fidelity's and other options, employee services, and payroll integration, including online sites for employees to manage their 401k allocations. Fidelity also has a strong presence in Canada, being the largest mutual fund manager in that country. Some key components in Fidelity's growth are financial and technological innovation, as well as thorough financial research that has translated into sound investment decisions for the most part. My colleague Nadir Giga will further elaborate on this.
Thank you, Anna. My name is Nadir Giga, and I'm going to talk to you about the growth highlights for Fidelity Financial. Fidelity's key growth components have been technology investments, innovation, and a solid in-house investment team that acts as researcher and advisor to Fidelity's mutual funds. In the 1940s, Fidelity launched the first income-oriented mutual fund to invest in mostly common stock. Several funds launched following their launch, and this helped establish the firm's reputation as a solid investment company. In the 1970s, Fidelity launched a toll-free line for direct advertising and an automated information phone system. A decline in the stock market caused Fidelity's managed assets to fall by over 40%. The firm created the first money market account with check writing and also a no-load fund, and they rebounded from the setback. In the 1980s, Fidelity Systems Company invested in state-of-the-art phone centers and computer mainframes, giving way to hourly pricing capabilities for select portfolios, better tools for fund managers, and better customer service. The firm also creates the first tax-exempt money market fund, offers credit card services to retail customers, and creates low-cost funds for long-term high-asset investors. In the 1990s, Fidelity was the first mutual fund company with a full-service internet site. The firm also established alliances with research firms and investment banks, allowing for initial product offerings and third-party securities research. The 401k management arm that is now essential to Fidelity's leadership and growth is set in motion during this decade. Next, I'll have Michael Miranda talk about SWOT analysis.
Hello, my name is Michael Miranda, and I'm going to begin with the strengths of the SWOT analysis for Fidelity. The first strength for Fidelity, which cannot be computed by any numbers or any data, is their experience. They've been around since 1946 and have a well-trusted name in the industry. Above that, they have a diversification of services. They offer brokerage and clearing services, wealth advisory services, retirement planning, and research services on top of their mutual funds. Now, in the mutual funds, they also have a well-diversified portfolio. They offer domestic equity funds, international equity funds, sector funds, real estate funds, stock index funds, bond index funds, asset allocation funds, life cycle, and hybrid funds. Now, at least one fund within all these categories is rated 4 or 5 stars with Morningstar. Now their weaknesses. First off, they're privately owned. Being privately owned, it makes it difficult to raise capital in time of need. As of right now, their main source of capital would be to issue debt. Issuing debt can cause interest rate risk because as interest rates go up or down and fluctuate, the debt that they have offered to investors can also make them force them to lose or make money, depending on the situation. A quick issue of stock can infuse a quick capital into the company, which will allow them to further their business operations. Now, they've also had troubles with the NASD. Between 2001 and 2002, they were fined $2 million because of employees who altered and destroyed documents in 21 of 88 branches. They were also fined $400,000 in 2007 for preparing and distributing misleading sales literature. On top of these troubles with the NASD, they also had very poor performance in 2008. Their average fund lost 40% and performed worse than 64% of its competitors. This can lead to a large number of investors wishing to redeem. And on top of that, troubles like this may also worsen the reputational rent. Now I'm going to pass it on to Manuel, who will talk about the threats to Fidelity investment.